So I need some input if things get spotty and I need to do something to correct it. So just let me know. So here we are, starting our 10th year here at the Intentional Trader. It kind of snuck up on me. I didn't realize it until like a week ago that this is our 10th year that we're just starting. So not a whole lot of us can say that we've been around that long. So I hope that that means something to a lot of you that are maybe contemplating what trading system to look at and go with, and company to put your trust in. We've been around for a little while and plan to be around for a while longer yet. All right, so here's all the new risk disclosure statements that we have to say. Basically, it says don't trade. If you do trade, you're going to lose all your money, and there's a really good chance that everything I say is a lie and that I'm just lying to you. So don't believe anything I say. So basically, that's what that says, and not in so many words. But make sure that you only trade with money that you can afford to lose, because the fact of the matter is, because of human tendencies, there's a good chance you are going to lose. So that being said, we got three things we're going to cover, and we're going to do some of this really quickly. We are going to have a Q&A, but before we have a Q&A, I thought I'd give you guys some information to ask questions about for those of you that don't have enough information to ask good questions. So we're going to do a quick overview of what we do. Now, this overview is usually takes about an hour, but I'm going to do it in probably about 20 minutes. So we're going to get through it really quick. If you feel compelled to stop me, I will stop on this particular presentation. Most presentations I do, I want to stick to a schedule and really move through the information before I take questions. Today, if you have a question specific to what I'm talking about, I will stop and answer your question very quickly and then move on. Okay, so I'm not going to go into a lot of detail. If you're looking for detailed answers, let's wait for the Q&A session. Okay. All right. That being said, let's move on to something real quick. We do have some specials. These have been going on for the month of January. They end. Connor, help me out here tomorrow. I think these specials end tomorrow. So we have a couple of bundles um, that have indicators in them that we're going to talk about today. And I'm going to go through all of this stuff very quickly on how to use all this stuff and the trade setups. All right. So we have a couple of bundles to kind of get you started. Some of you want to start a little bit slower and kind of ease into this. So you can start with either the Brain Boost or the Scholar. We do have other bundles, or we can create custom bundles for you. And so you see the good savings there on these bundles. They also include time in our trade room. We have the Mac Daddy one and done bundle, which is the Einstein bundle. That's ultimately what most of our traders end up either getting initially or upgrading to. So that includes everything that you see in the other bundles, but you also get all of the trade room indicators. You get all future indicators. You get unlimited trade room time. We have a training program. We have a weekly group mentoring sessions, priority support. We have a couple of applications that are subscription-based applications that we charge people for, but you guys get them for free. The Einsteins get them for free. So we have a whole bunch of stuff that goes in the package. I am working on a new indicator to help us filter trade entries a little bit more carefully. All right, so about me, I was about 20 years, a pretty good remodeling contractor, ran a successful business, worked real hard to get up to the income level that I had gotten to, but was ready to shift gears, was a little tired of the business. I decided I was going to start trading, and it was going to take me a couple of months. and then I would have it mastered and I could stop being a contractor. Well, that didn't work out so good. It took me about 7 years before I decided that I was the worst trader in the world, and I had no business even attempting trading. But I kind of had an aha moment, which you can ask me about in the Q&A. And this one aha kind of led me on to this series of ahas that ultimately led me to being a full-time trader. And I began developing software first for myself, then for a few of my friends that I was teaching how to do what I was doing. Next thing you know, we have a whole trading system and trade room, and it just kind of grew organically. Okay, so that's me in a nutshell. If you want to ask me more about my personal journey, that can be done in the Q&A a little bit later. All right, so historically, there's been different types of trading that have been popular. Um, and in the beginning, you saw a lot of fundamental analysis or value analysis, and that's where you're looking at the fundamentals of a particular business or a sector, and you try to decide if the current price of that whatever instrument it is, whatever the asset is, uh, if the current price is undervalued or if it's overvalued, if it might be a good buy because you believe that due to the fundamentals of the company, they really are poised to do well in the future. Okay, so this was the original, way back in the early days of the markets. Um, this was how you decided on what you wanted to trade or what you wanted to invest in, and over time, with the advent of more powerful technology, we'd see the introduction of what many of us consider trading today, and that's the technical analysis. So essentially what we're doing with technical analysis is we're using the historical values to attempt to predict the future values of a particular asset, whatever it is that we decided to trade. So then when we start to add this to kind of the historic, the fundamental analysis, and that kind of begat the trend trading. Okay, so we're kind of doing some fundamental analysis. We're kind of doing some technical analysis, and we kind of come up in the whole idea of the trend trading, and the trend trading for a lot of people, that's about where they've stopped. That's about what they believe is the most current form of trading. But to be honest, with the with the advent of even more technology and even more powerful computers and even more people now that have the ability to trade because of computers, um, we've gotten to a point where it's it's hugely favored. The trading is hugely favored to the technical analysis, and that begets the momentum type trading. Okay, so that's using momentum and momentum analysis, and that's what the smart money is using today. When you sit and you watch charts and you're just waiting for your trade setup, and you watch all of these crazy things happen on the charts, and you're like, "Gee, what was that?" All right, that was momentum trading. Okay, that's the smart money doing what they do. The valuation analysis or value analysis is becoming less important this day of the electronic games, that are being played in the markets. So, it's all pretty relative. If you notice, we have a nice uptrend here, right? And we're looking at patterns in this uptrend that if you don't really know what you're looking for, you just see a wavy trend, right? But if you break that trend down into sections, you're going to notice repeating patterns. And all of these repeating patterns are relative to what happened just prior to that pattern, okay? So it doesn't have to be a particular percentage of the market or a fixed amount of the market. It's relative to the recent past conditions, okay? So all of this creates a trend, and momentum traders are looking to take advantage of this trend. Momentum traders trade from level to level inside of a trend. They're going to try to capture small moves based on aggressive buyers and sellers bidding a price up or down by overwhelming one side of the bid-ask spread, okay? Setting off the strong move in one direction. It's usually temporarily over a short span, okay? But that's where the big boys are trading now, okay? That's what the smart money is doing. They're into the momentum trading. You know, they care a lot less about this big trend than they do about their advantages right in here, okay? Right in here. So you got to wonder, well, why did the market suddenly go from this to shooting up like this, shooting up like this? There's a strategy involved here, okay? And that's where the big boys are making all their money. So let's look inside that a little bit. All right, so what's going on here? So you'll notice that in this section, price is just channeling. And to you and me, that just means there's nothing to do, right? It's boring. Markets are boring. It seems to be an area of very low interest. Now that it could be an area of accumulation or distribution. Regardless of what it is, it's not a good trading opportunity for most of us traders. And then we got the next level. We're going to break out of this channel, okay? And the buying sentiment begins to increase with a sudden bidding up of price. This is where the momentum traders, okay? Oh, is it still hard? You guys having a hard time, or is it just Rose? Do I need to turn something up? Audio went down all by itself. All right, how about that? Is that better? Still low. Weird. This is so weird that this has been happening. All right, hold. Let me try something here. Did it just drop all of a sudden? Yeah, it's not letting. Yeah, I know. I turned it off. You had a loud bump? Weird. Because I'm not doing anything. Is it better? Still low. Okay. Stand by. Okay, how about now? I have no idea why it does this. Better. Okay, well, let's move on. I'll keep this, my microphone properties open. It just shuts itself down for some reason. All right, so let's talk about these momentum traders, and I'm falling a little bit behind here because I want to make sure you guys understand. The momentum traders are waiting for this little breakout right here. All right, so the breakout traders are just thinking of jumping in right here. You know, everybody knows about breakout traders. If not, you can ask me later. So breakout is a trading strategy. So when you break out of a channel, the anticipation is it's going to go for a while. So we've got this breakout right here. This starts to trigger the momentum traders to start buying up as much as they can, as fast as they can. This buying up causes a sudden shortage of the available asset. Which what happens when you have a shortage? When it comes to supply and demand, what happens? You're going to end up uh, driving prices up, at least over the short term, right? Then the buyers begin to become exhausted up in here. All right. Now, momentum traders are just that. They're not in the markets very long. You notice the big boys are not constantly, they do not constantly trade the markets. They are in and out. That's how they make their money. That's what the smart money is doing nowadays. Those of us that think that you need to put on a trade and sit back for a few hours and wait are still trading the old way. Okay? You're, you've got, understand that with the technology the way it is today, we have much better opportunities. All right, so these guys are trying to they're buying here, they're selling here, and they're making all the money they need to make. All right, and then what they're anticipating is for this freight trading effect, I'll tell you about this in a second, to push price up, and then they dump everything they have back on the market. All right, so they overwhelm supply. The supply overwhelms the demand, and even though there was a lot of demand there for a while, suddenly the demand is gone because there's too much on the market now. So it's a simple supply and demand. This whole thing, you look at this pattern, this 1, 2, 3, 4 pattern. Go look at any trading chart. If you're watching this on video, stop the video, go pull up a trading chart, not a Renko or a range bar or one of those. So I don't care for those types of charts. They don't give me enough information. But a time-based chart, which is what the smart money uses, the time-based, and they're all trading on time. And you can see that on the open of minute bars. You can notice the change in volume and things. So it's obvious that the smart money and the big money is using a time-based chart. So that's what we use. So you can see this repeated no matter what time frame you're looking at. You can see this repeated over and over and over again. And it's very obvious, very clear. All right, so what are we looking at? This is exactly what we're looking at. Okay, so we had our channel here. Momentum traders are jumping in here. This is their buy zone. They already know this. This is predetermined. This is their sell zone. This is all predetermined. So we've got this this unnatural price increase because of all of the buying, and they're pulling out the available assets, and so they're making them more rare and less available, so that drives price up. Then they start selling it real quick. Well, this is about when this breakout, this is when a lot of the breakout traders are going, okay, oh, there's a breakout. I'm going to jump in there with the breakout. Next thing you know, you have this freight trading effect right up here, right? And price keeps going, even though the selling, they're getting all their stuff done here. This freight trading effect is all of the people that try to jump in late, and they're about to get slaughtered. People are saying, oh, there's stop hunters out there. Now you do it to yourself. If you jump into something that looks like this and you don't want to get left behind, what do they call it? FOMO, that fear of missing out. And so somewhere in here, you're jumping in to try to get in on this. And next thing you know, these buyers, the rest of them dump all the rest of their contracts on the market because and then they just overwhelm the demand. And that's what we call exhaustion. All right, there are no more buyers. And price starts dropping. Okay? This is the edge that we enjoy with our system. Because we understand exactly what's going on here, we know when the odds are in our favor. And we're going to be shorting this all day long. We're not trying to get in on the breakout. We're not trying to get in during the momentum traders trades. We're not trying to get in on these late part of this trade when everybody's just trying to jump in to ride the coattails. Now we're waiting for all of that to happen, and then we get in on this exhaustion. Okay? So this is what we trade. This is how we trade, and this is what it looks like to us in the trade room. This is what that exact trade setup looks like, and I'm going to go over this with you on our trade setup training. So we're looking at, you can see it. This was a random chart. I didn't go look for a chart. You can see it on any chart. You see the channeling, you see the hard push up, and then the straight pullback. Okay? This is what we're looking for, this confluence of indicators suggesting that all of these conditions, all of this has happened, and we've now reached a level where it's very likely that we've overwhelmed the supply has overwhelmed the demand, and that price is going to be tanking. Okay, so that's what these indicators are telling us. Now, for those of you that want to see this in action recently, you can. By the way, today is the January 24th, 2019. If you're watching this on video, we have on YouTube another video from last week, I think. There is the URL. Connor, I don't think you can copy and paste. Hold on, maybe I can copy and paste that for you. No, I don't think I can. Maybe I can. Hold on. I was going to try to give you a break. Let's see if I can copy and paste that for our attendees. There's the link to that video. And actually, it didn't go in as a hyperlink for me. Connor, maybe you can put it in as a hyperlink. But that's a video from last week, a day in the trade room last week. And the reason we use that one is because we actually took a few more trades than usual that day. So there's lots of good examples to look at. There's lots of audio where you can hear me commenting on the trades, talking about the setup before the setup happens, telling you I'm about to enter the trade and when I entered the trade and when I exited the trade, and all of that is on the video live in real time, okay? So you get a real good understanding of what it is that we do, how we do it, and what the trade room is like. And here's the thing about our trading system. It is the most simple trading system you'll ever find. It's not easy, just like trading is not easy. Okay, so the whole idea, there's a difference between simple and easy. Simple is it's easy to understand. It's simple to understand the basics of what it is that we do and to recognize the trade setups. It takes time and practice to get good at placing those trades and managing those trades and knowing your risk tolerance levels, because you can certainly tune the trading rules to your risk tolerance levels. If you want to be a very aggressive trader, if you want to be a very conservative trader, you can still trade this trading system without having to change the system. Okay, so it's a real simple system. And you can see that because we have a lot of very sophisticated technical analysis going on behind each one of those little doodads on the screen, each one of those little arrows or stars or dots or whatever. There is an entire trading system built behind that little thing on the screen. So it is really easy to make a trading system complicated. It's really hard to make a very sophisticated trading system easy. And we've worked at it for over almost 10 years now. And so we've gotten pretty good at it. So my bigger problem, and the reason why I made sure that our indicators worked like this, when I was struggling as a trader, when I was working at trading and failing at trading, this was my big question right here. Does this set of conditions that I'm looking at right now qualify as a trade setup? And the way I felt when the trade room moderator would say, well, yeah, as you can plainly see, of course it does. And I felt like I was looking at that chalkboard there. I felt like, oh, yeah, inside there somewhere is a trade setup, but I'm too stupid to figure it out. Or at least there's all these, shades of gray that say, nah, yeah, sure, it's pretty good. So I had decided, because I had been through that enough, I was going to make it very clear, very cut and dry. And I decided I was going to take the best trading systems that I could find that made the most sense out of to me. And I would try to get them all to agree with each other. And when I could get them all to agree with each other to say something is about to happen, something specific, then I would have something. All right. So if you look at this and you ask these people a question, and this is a non-correlated group of people. They don't all come from the same family. They don't all have the same job. They don't all do the same thing. They don't even know each other. They all have different backgrounds and life experiences, but they come together to agree strongly with each other about something specific. Would you give that credibility? The fact that that many people agree to something. If you say, hey, do you think price is about to do something? They'll say, yep, I agree. Would you give that credibility? Well, that's kind of the way I see it with our indicators. I'm looking for a confluence of indicators. I'm seeing strong momentum. I'm seeing that the order processing is going really fast. I'm seeing that volume is churning. I'm seeing that we have divergence. I'm seeing all kinds of things that are suggesting that something is about to happen. And when all of them agree with each other, I've got a trade setup. Okay. So we've even made it more simple. We've taken these three indicators, which are three of the strongest indicators, to generate a trade signal, and we turned it into what we now call the Rockstar trade setup. And we're going to talk about that during our training, the training part of what we're going to do. So the Rockstar is a confluence of this here, the speed tick, this pink outline, which is an overbought condition, and this 3D, which is telling us that we have a divergence, in three different momentum oscillators are saying that even though price is going this way, momentum has already shifted direction. So we have a confluence of these indicators, and that confluence generates a Rockstar. Now, we also have the ability to turn off any one or all of these three to generate a Rockstar. So you can tune the Rockstar to generate a signal whenever you want it to generate a signal. So on our website, you have access to all of these indicators individually. By the way, we've won awards for these indicators from Trader's Planet. So let's talk about these indicators. We have several that help us to read order flow. Now there's order flow and there's order processing, but we're going to kind of keep it all under the umbrella of order flow. The speed tick is the indicator that has the little arrow, and you'll notice that the arrows on the side of price here, I'm sorry, side of the bar here, is suggesting that price or the orders are being processed so fast that retail traders are likely not the ones causing that to move, causing price to move like that. Okay, and we're using an underlying histogram to generate these signals. Okay, so the fact that retail traders are unable to make trades that fast should tell us something. That tells us it's not the retail traders, it's the smart money. So we go back to what I just showed you earlier, this here, when the smart money is pushing it up here, that's what's happening here. Okay, so we need to know when the smart money is doing their thing, because we know they're setting it up for that pattern that I showed you. Okay, we also have our ricochet indicator that does kind of the same thing, but instead of it showing orders that are being processed faster than we could generate those orders, it actually shows us more like a drag racer, that the orders went from 0 to 100 in like 2 seconds flat. When that happens, it's very likely something has been manipulated and price is about to pull back. All right, so we have our pullback alert. We base this on volume spread analysis, and there's entire systems out there based on volume spread analysis. And if you've ever looked at one of those systems, it'll make you go cross-eyed with all the stuff they have on the screens that you're supposed to be able to read and understand when to place a trade. Just put a dot right where something specific is happening. Now, what does that dot tell us? Well, if you look at these two bars, these two candlesticks, you see identical candlesticks, right? So if you're looking at them on a static chart, as far as you're concerned, these are the exact same bar, the exact same thing happened on those bars. You have no information to tell you that those bars are anything other than perfectly identical bars. Yet, they were formed a very different way. And that difference is extremely important. So at first the bars open with a tick that comes in to open the bar. Then this bar kind of just shoots up and then settles back down to the close of the bar. Nothing real specific happens here. This bar opens up and it shoots up and then it pulls back up, goes back up, back down, back up, back down, back up, back down. Okay, so there's a churning action here. Those two bars are very different. This bar is saying, you know what, the sellers and the buyers are fighting. And if price has been moving a long way, we're gonna look back at bars relative to the current bar. If price has been moving a long way and we get this kind of churning action, the chances are the buyers are probably exhausted in here and the sellers are going to take over. Okay, there's a lot of information going on there. Divergence indicators. We've got essentially three individual divergence indicators called the McDiver and the Flash, are two of them. So for those of you that don't know what divergence is, when we've got price, this is overly simplified. When we've got price, these are price bars, and then we've got the momentum, they will typically run together. Okay, but when they get out of sync with each other, you'll notice that at this point, momentum is going up. At this point, price is going down. So we have a divergence. What that tells us is, and what almost always happens every single time we have a divergent condition, is that price will follow momentum. So if momentum is heading up, price is going to try to catch up with that momentum. Okay, very important with divergence. Typically, it's been really hard to read because divergence has all these different lines and back painting and usually prints 3 bars after the fact, and you kind of have to learn how to see and recognize divergence. And I've never found a good divergence indicator until ours. I think this is up until the Rockstar. I think this was probably our these indicators were probably our most popular indicators on our website because they just give you a yes/no answer. Is there a divergent condition? Yes or no. You don't have to study the oscillators that create divergence. So these work so well. The McDiver is the divergence of price and the MACD oscillator. The Flash is divergence of price and the RSI momentum indicator. These work so well, I thought, you know what? This algorithm that we're using for these can be used on other oscillators, momentum oscillators. And so that's where we came up with the Super D. All right, so the Super D includes the MACD and the RSI and 5 others. So we have 7 different momentum oscillators to help us determine if we have a divergent condition. Okay, so remember, I'm all about confluence. The more people raising their hand, the more likely I am to believe that piece of information. So we're also looking to read strong momentum. And why are we doing that? Strong momentum always leads to exhaustion. How many of you have ever witnessed a trend in trading or on a trading chart that only moves in one direction. It just doesn't happen. Maybe over a very, very short period of time. It doesn't happen. What happens is we have periods of momentum followed by exhaustion. It happens over and over and over again. So the trick is to find the momentum, read the momentum, understand when we have very strong momentum, because the stronger the momentum, the more imminent the exhaustion. The more imminent the exhaustion, the more imminent the pullback, right? So we have our very typical overbought, oversold, but we put it right on the candlestick, right where your eyes are, okay? You don't have to look at an oscillator. It's right there. It tells you overbought, oversold. So we know there's a weakening right there, okay? So we have potential for exhaustion. We have our meter, again, reading strong momentum. These bars will go from a dark color, a black, and they will go through several shades of gray into a very white color. This will tell us how strong the momentum is. The lighter the color, of course, you have the option to alter these colors inside the indicator. We use from black to white. And the lighter the color, the more imminent the pullback. Okay, the stronger the exhaustion. All right. Same with the velocity indicator. When we see a whole lot of price changing within the bar, it doesn't have to move. The price doesn't have to move a lot. Just a lot of price changing inside the bar. We can anticipate exhaustion. Same with the naked rockstar zone. If it prints, if the star prints inside the zone, we know that we're channeling. If it prints outside the zone, we know there's a very good chance that price has become exhausted. Okay. So the rock star, all right, is remember we have the confluence of those indicators, and we have two setups. We have the rock star setup, which was the first one we started trading. We just killed it so much with the um, that means it's outside the channel, Rose. The zone, that means that if it's inside the zone, that means price is just not moving strong enough for us to anticipate exhaustion. So whenever price is channeling, you can't really expect anything of it. It's just drifting kind of aimlessly. When it gets outside the zone, that means it has determined to move in a particular direction. Okay, it's making a move that direction, and so it has committed to that direction, at least in the short term. Okay, now before we move on, we are going to go to the next section, which is our little training session. So before we move on, any other questions or comments? I know I'm moving very quickly, and I'm covering a lot of material really quick, and I hope you guys are getting all of this. Any questions so far on just on what I've covered? Anybody? I don't see. Oh, maybe. Oh yeah, it does. It does. And so the meter does, because I mean, how often do we see momentum in trading? So we're trying to pick up the very first signs of momentum. Now, it's really impossible to determine when momentum has set in until it already has. So say we're 2 or 3 bars into a momentum push. Our indicator will actually, under those conditions, help you identify where that momentum started and back paint a couple of indicators back. That's only to help you understand where the momentum started. It doesn't have anything to do with coming in late, because the current bar will also be painted. And it's that bar that you're going to be anticipating the open of the next bar. All right, so it does this often, but it needs to be in confluence with other things. Now, the way I have it set, there is also a setting in the momentum that you can have it only show the current series of momentum. So as soon as the new series starts, the old series goes away and the candlesticks turn back into their regular color. So in the trade room, we only see the most current series of momentum. Um, okay, so have you ever played golf, Jim? Golf looks really simple, right? I could go up and take a lesson and have somebody tell me exactly what to do. Exactly. Am I going to be able to do that without practice just by him telling me what to do? This is an, you realize, a lot of people don't realize that trading is a competition, right? You are competing with other traders. You better be better than them at executing trades, okay? So the practice comes in understanding the trade setups, understanding the different conditions in the market, understanding order flow, understanding your own risk tolerance levels, understanding how to put on a trade on the trading dome, understanding how to manage that trade based on the current conditions, understanding um, which set of rules you want to use, and whether I'm not going to give you a cookie cutter, Jim, because we're all very different people. We are not the same. We do not have the same personality. We do not have the same personality characteristics. You may or may not be faster than me at trading. You may or may not have faster internet than me. You may or may not be able to spend as much time working at trading. Are you trying to say that you think that something that is a skill uh, shouldn't need to be practiced? I mean, because this is a skill. Trading is a skill. Does anybody want to argue with that trading is a skill? Unfortunately, sounds like you think you just need to know when to push the button. How long have you been working at trading, Jim? And I don't mean to. I mean, we might want to save some of this because I have a whole lot I can add to this during the question and answer. We can talk about this all day. No, the Rockstar does not tell you when to take a trade. Nothing that I have showed you tells you when to take a trade. You're the trader, right? You decide when it's right for you to take a trade. What do indicators do, Jim? I'll make this quick. Indicators indicate. Indicators don't tell you to do anything. Indicators indicate when a condition exists. Then it's up to you, the trader, to decide under those conditions, is it the right time for you to take a trade? Okay, that's the difference. I think you're looking for something to remove the accountability from you making good decisions or making compulsive or impulsive decisions. I have a Phil, I have practiced, and we teach people how to practice. We have a practice program that teaches people how to practice. And then you practice at double the speed because you can use NinjaTrader's playback utility. And then you practice at 3 times the speed. And then you practice at 4 times the speed. Uh, and when you get down to trading live, it feels like slow motion to you. So let's move on to why do a lot of there you go, Jeff. Good analogy. Good analogy. All right, I hope I answered both of you clearly enough, but to But some of this isn't directly related to what I was just talking. Let's move on, and I'll answer as many of those as you want in the Q&A. Let's do, whoops, let me back up a little bit. Let's do, I'm going to stop the projector for just a second, just so you know you're not going to see anything on the screen, so I can move it over to a different screen that I have a little utility set up for some scenarios that I can use to show you some setups. All right, let's. All right, so this is a little utility that I use, just a drawing tool that I use for our training sessions. This gives us the ability that, oh, you don't think this takes eye-hand coordination? This takes absolutely. I just had a conversation with one of our traders about that exact thing. If you want to trade in today's markets and you want to take advantage of the opportunities that are new to these markets because of technology, you have to take advantage of, or you have to practice using a trading dome. And I guarantee you that takes eye-hand coordination way more than you might imagine. Okay? But here's the good news. If you practice, it's not that hard. Think about driving a car, Jim. How much eye-hand coordination is involved? If you just drove a car today, you might tell me almost none because I did it without thinking at all. I drove the car. It had no eye-hand coordination because I can't even remember doing it. Okay? Fact of the matter is, it takes a tremendous amount of eye-hand-foot coordination. But you've been doing it so long, and you're practiced at it, and you're experienced, and you've found your own way of doing it where you're comfortable doing it. Does that all make sense to you? We want to make trading into something that is so different than it really is. It's the same as any other skill you've ever gotten good at. And if you want to argue with me that trading is not a skill, that you only need to know when to push the button, I'm going to suggest that you may not be a real successful trader or have the opportunity to ever become a real successful trader because of your faulty assumptions or expectations about trading. Okay? And I'm not trying to single you out. This is very typical. Okay? It is very typical attitude to come into trading. And I say that because that was me. That was me when I was struggling. Why should this be so hard? All I need to know is when to push the button. That's all I need. Just tell me when. If it was that easy, don't you think we'd all be successful traders? You realize for the markets to work, most traders have to lose at trading. Otherwise, we don't have any markets. Okay? So obviously it's harder than that. Obviously you have to have an edge. No, that's not the purpose of indicators. That's totally up to you. The purpose of indicators is to tell you when a condition exists that you, the trader, might find to be conducive to taking a trade, or to be in your favor, or to give you an edge. Okay, let me back up a little bit. I don't want to get too far off track. Let's talk about the training session here first. I'll be happy to talk to you more about that. Okay, and I'm quick to get off track here. Let me lock this down so it doesn't move again. Okay, so we've got a chart here, and I've got several scenarios I can set up on this chart, um, based on questions or things that you guys might have. But here's what we're looking at. Okay, so we've got lines of support and resistance here. We actually use these quite a bit, to help us, although they're not absolutely required for our trade setups. They do provide us with more opportunities having support or resistance behind the trade. Okay, so the very first trade setup that I started trading as a pullback trader was when price would approach on a strong push a line that had not been touched or crossed during the current trading session. Okay, turn this over. Oops. I noticed, just from empirical observation, meaning I've been sitting watching charts for years, that if a line of support or resistance, which a basic floor trader pivots, nothing major, a line of support or resistance had not been, I had been taught, okay, I had been taught that the longer it had been, the less likely this line was going to be, the less strength that this line was going to have. Okay, that's what I had been taught. My experience showed me the longer it's been since price has been near this line, the more likely it is that price was going to react to that line if price approached that line with a hard push. This is the very beginning of my pullback trades, noticing that price will bounce off of a line. Now, this number here is a relative strength number. This says that it's been 2 hours since price has hit this line. If there's no number at the end of this line, that means that the high of the day was probably down here somewhere, below the line. And that means that line hasn't been touched at all. So as price is beginning to approach this line in a very steep fashion, we're channeling here. So relative to this channel, and this pattern is going to repeat. You're going to see it over and over and over again. So we're going to see this channeling, and then we're going to see this push. And then price slams into this major line of resistance, which is just a floor trader pivot. Why floor trader pivots? Well, that's what everybody else is looking at. So that gives that line value. People are going to kind of freak out, and they're going to be pausing. Wait a minute, hold on. We're at a line of resistance. I'm not sure I want to be the one to cross that line. There's a very good chance that price is going to slam into that line, and price is going to at least pull back a little bit before it attempts to hit that line again. So I started trading this only if price slammed into that line on a straight up like this, and that line had either not been touched or had not been touched in a very long time. Okay, 120 or higher is my rule. So I would put on a stop limit order here, meaning I'm going to put on a trade here, and if price kept going, I'm safe. But if price hit that line and backed up, it's going to pick me up on its way down. Okay? Now, I started getting really good at that trade. That trade was working really well, but I started thinking, there's more information inside this bar to tell me that there's a high probability that we're going to get a pullback here. So right now, all I'm looking at is this big push. And this is, by the way, as a trade I still take, and it's called an FT trade, or a first touch. That's why these lines are called FT reset lines. That's our support and resistance. Okay, that's FT reset. Now, I don't trade them anymore unless price is overbought. So I add now one layer of confluence that says if I have a big push into a line of major resistance that has not been touched in 2 hours or longer, I'm going to put, as soon as it hits the line, I'm going to put a stop limit order on down here so that as price just hangs around here, I'm safe. But if it bounces off that line, it's going to pick me up and drop. And as it drops, it's going to take me with it. If price takes off, I just take my order off. Okay? All right, let's see. Make sure I'm not missing any questions. All right. Oh, Graham, you and Graham and Ken are helping Jim. I appreciate that, you guys. Yeah, Graham and Ken are both, if they're the same Graham and Ken, are both members of our trade room. Are you the same Graham and Ken that are members of the trade room? I don't know. You guys just use your first names. I'm not sure. Hey, Graham. Thanks for your help. Oh, so there's a good opportunity, Jim. We do have some traders are here. Feel free to ask them questions, and if I realize it's a question for our traders and not for me, I'll just skip it. And I'll let Ken and Graham and any of our other traders that are here. Some of them are quite experienced. Some of them are new with us. Don't listen to Marshall, though. If Marshall says anything, don't listen to him, unless it's good. Marshall's a wild man. I had to throw a brick at Marshall's head this morning or yesterday. All right, so this is my FT, my first touch trade. Okay, so this was the beginning of the whole thing. It's my first touch. So I started looking at that, and I started noticing something even more. I started noticing that it was very common to see something that looks more like this, where we have these, and I'm just trying to space this out here, where we have this channeling, okay? Then we have a couple of up bars, and then we have a major up bar, a really big up bar that forms really fast. So I started noticing that this bar would go like crazy. So I started looking at volume to see if I could detect with volume something inside this bar, and I wasn't getting very far with volume. So then I went to time and sales, and I started looking at the orders being processed. And as I was studying that, I really wasn't getting a good handle on the number of orders being processed. I wasn't getting anywhere with the number of orders. But I did notice how fast the time and sales window started moving when this happened. The orders I was looking for, thinking I was looking for the big boys, I was looking for the really big orders. Because I thought the big boys all traded really big orders. Well, how easy would that be to figure out what they were doing? They don't do that. They take blocks of orders and they put them in really, really fast. And they do it in small enough blocks where we can't detect them, but in large enough speed or enough speed where it could only be somebody who has a supercomputer and super algorithms and an inside, computer that's inside the exchanges. They're the only ones that could do it that fast. So when I started seeing that kind of speed, and it was kind of just an epiphany one day that that's what was happening, I had a programmer cobble together a histogram that was kind of like a speedometer, and rather than reading the number of orders going through the exchange, I wanted to know how fast they were going through the exchange. As soon as I had that, and I started putting the uh, the speed of the orders being processed, and I put that on first I put it on a tick chart, and then I transfer the tick chart over to the minute bars. So there's a lot going on here. This now tells me, remember what we talked about. Hopefully you guys all remember what I talked about. This is what's happening when that manipulation is happening on this upthrust bar. We're going to see a whole bunch of this, some medium breakout bars, and then a major upthrust bar. Okay? They may not all be perfect because they do still tend to try to disguise what they're doing to some degree. All right? And then again, we also might get competing HFTs or quants, or the big boys, the market makers. They may compete with each other and create an unnatural bar that we weren't expecting. When that happens, this speed tick is going to turn into something that looks like this, and that's going to say, hold on a minute, the orders are going much faster than we have the ability to anticipate what's happening next. I'm not trading this. In fact, I'm done with this whole move right here. Okay, and we get those also too. And then we get these that are kind of in the middle, and this is where you use your discretion. This is where the orders are going twice as fast as what we would expect the typical market maker to do. This might be 2 or 3 of them, and it's fast. It can be a bit hectic, but it can also fit your risk tolerance profile to where you want to trade these. This may be outside your risk tolerance, and you say, nope, I'm only trading the ones where it has a smaller speed tick. That's my comfort zone. That's when the orders are being processed at a rate where I feel comfortable trading. Okay, so this is totally up to your discretion, and why we give you several different levels or thresholds of signals. Okay, so this is how I started trading, what I call the speed tick trade setup, and I'm waiting for the open of the next bar. My decision is made on the open of the next bar. So if this bar ran up and I got a speed tick on this bar, I have a strong push, I have an overbought condition, I have a major line of resistance that has a high number on it that just slammed into it, and the next bar opens under that line, that's where my trade goes on. That's where I short this. Okay? That's my entry, and I traded that for 4 years. Just that, but nothing else. That was it. That's what got the whole thing started for me. That's what I started the trade room teaching people. That trade setup right there called the speed tick. Now we didn't get as many because it relied on major lines of support or resistance. If we got this type of a setup and it happened like this, there's no trade there, right? Because no major resistance behind the trade. Now, I still don't trade a speed tick trade setup without resistance behind the trade. I do have a good bit of confluence, but if there's something to learn about what's going on inside of this bar or inside of, whoops, hold on, or inside of this series, If there's something to learn, I want to know it. I want to know everything that's going on inside of a series like this. And the more I know about this series, the more likely it is I'm going to know what happened next. This outside of the bar? You mean print like this outside of the bar? It actually prints on top of the bar. You familiar with layers? Like layers? Yeah, it can print anywhere on the bar. It doesn't matter where. This is layering, so this is not actually on the same layer. This is on a different layer. And to be honest, this speed tick really thinks it's printing on a tick chart, but we make it print on the minute chart. Okay, so there's there's a lot going on inside of that. Oh, every now and then, that's a NinjaTrader thing. Every now and then you'll get one that prints up like this. But typically it's going to be within the bar. That's a NinjaTrader thing. Yeah, Lawrence, inside of our FT reset lines, there are some other lines. Yesterday's high, yesterday's low, yesterday's range. Then there's, or pivot range, yesterday's pivot range. Then there's mid pivots, and a few other lines inside of our FT reset lines. So yeah, there are other lines of support or resistance than just floor trader pivots. There are also other algorithms inside the FT reset indicator that you can choose besides floor trader pivots. There's like 4 or 5 different other algorithms that you can use if you want to use other types of pivots. You can. This is what we use in the trade room. All right, so I know I'm expecting a pullback here, but started studying divergence again for my 10th time. Divergence was such a struggle for me because I always felt like I screwed it up. I either missed it or I jumped in thinking I had it and realized, oh wait, that wasn't divergence. Oh, I thought it was divergence. But if any of you have ever tried to trade divergence, you'll know that it's really, really difficult. Now, the problem with studying something that is really difficult, hard enough to get good at it, is you have to have the complete confidence that the studying that you're doing is going to have a net positive result. Now, a lot of us will study a lot of trading, but what we're doing is we're actually collecting information. We're not actually studying and practicing because we don't have the confidence that the time we're spending on it is absolutely for sure positively going to have a positive result. So we don't put everything we have into it. That was my experience with divergence. I heard about it, I looked at it, I tried to figure it out. I saw some value in it, couldn't make it work. So that was when I was struggling for so long. So I'm working at this over the years. I'm getting good at this. The pullbacks are getting better and better. I'm getting higher and higher percentage. My trading account is beginning to grow. I'm looking to find out what else can I see that's in this bar or this series to help me understand what's likely to happen next. So I started studying divergence, and I noticed when I studied the flow of orders or the flow of processed orders through the exchange relative to divergence of the RSI, price would almost within a few ticks, we might get some freight training here, but within a few ticks, turn and pull back. Okay? This divergence is helping us after this big push with exhaustion setting in, with it being manipulated. And the divergence says momentum, even though price is doing this, we know that momentum has already shifted this way. And all of this has been manipulated, and it's moving in an unnatural fashion. But it can only do it a little bit. And then it wants to catch up with momentum. Okay? This is when it started killing. We used to call this a speed flash trade setup. This is when we absolutely started killing it. This is when we all shifted gears. So I started looking at, this was just divergence of the RSI indicator. I started thinking, well, if that works so good, let's try it on the MACD indicator. That's where that little signal came from. The divergence from the MACD indicator. So I could have one, both, or one or the other, or both, and have a trade set up here. Still needed support or resistance behind my trade. Okay? Very strong trade setups. Very strong. But I also noticed we had a lot of these where nothing was, we had no support or resistance, but we ended up with something like that. A lot. So what I did was over time, now I had a lot of people that were trading this, doing very well with it, but needed something else. And that's when the rock star happened. Gosh, I don't even have a rock star on the screen. How'd that happen? There's one. Now we have them colored differently in the room. And there are different types of rock star trade. But essentially, we now don't necessarily need these divergence indicators, although they're still in the trade room. That rock star tells us we have an overbought condition. We have a bar that's being manipulated. We have a high probability of exhaustion, and we have divergence. That prints on the first tick of that bar. As soon as that bar opens, that prints. That's when your order goes in, okay, on the open of that bar. And yes, you say, oh, how can you be so fast? Half the time or more, this bar does, I'm out of bars. This bar opens and does that. It opens and goes up here. So my intentions are to trade, put on my order on the open of this bar. I would say more times than not, there's still a little bit left. This is what we call the freight training. There's still a little bit left, and price opens and then heads that way. I'm going to put my order in up here. If it gives me the opportunity to get a better fill than here, I'm going to put it in here. And now all I need is 5 ticks from here to pull back, not here. So there's the question, how can you do it so freaking fast? Chances are, if I go and I look and I wait until I see a rock star here, this bar opens, see the rock star, go to my dome, put the trade on, I'm going to get a better fill, or I'm going to get filled here, here, and here, okay? I'm looking at the price on the trading dome at this point, Rose. I'm no longer looking at the charts. I'm looking at the trading dome when I'm placing this order, and I know what the price is. So if the bar opened and went up here, yeah, darn right I'm going to take it up here. I just got a better fill. Those of you in the trade room on a regular basis, how often do I get a better fill? Every time price opens and jumps, if it's a trade, I'm going to get the trade up here. Now, a lot of times, but not, well, not that often, price opens and drops. That's when Graham enters the trade. I mean, not Graham. That's when Marshall enters the trade. He waits until price is way down here somewhere, just about to reverse. I'm sorry, Marshall. It's just too much fun. That's chasing the trade. I'm just kidding. You know better. The bar opens and then drops. Red bar. Now price is down here in a heartbeat. You cannot take that trade. You're just going to miss it. He's learning now. He's getting much better. Aren't you, Marshall? It's because you got a bunch of knots on your head from the bricks I throw at you. All right, everybody understand that? Do I have any questions yet about now this would be considered a naked rock star trade for the simple reason that there is no resistance behind this trade. Okay? This would be a rock star trade setup. Now these white lines, these are our FT reset support and resistance lines. These white lines are major, what I consider major support and resistance. I'm expecting a reaction from these lines most of the time. But this trade setup works so well that I will also take it with minor support or resistance. This is our high of the day, okay? Any line that moves during the course of the trading session, which for us is just the high or low of the day, it would be considered minor support or resistance, okay? I will take a rock star trade setup with minor support or resistance. Now, we talked about, let's move this. Okay, so this is a rock star trade. This qualifies as a rock star. And I showed you a naked rock star. So would this qualify for a naked rock star trade, anybody? Anybody? Rose? No. No. So Rose was a trick question. Naked rock star trades. Oh, wait, let's do this. Does this qualify for a rock star trade? Okay, we got a rock star trade with not as much confluence as I would like to see, but it is technically a rock star trade. Naked rock star trade, because we don't have support or resistance behind our trade, I'm going to require that it have more confluence suggesting a pullback. Okay? it's going to require that price be either overbought or have what we call our pullback alert on it, preferably both. All right. We talked about this pullback alert. This is the one where that churning action is happening inside the bar, where we have this major upthrust bar, a lot of buying going on, and then up here we get a lot of buying and selling, buying and selling, buying and selling. So the price is churning up in here. Okay, that's a good indicator that price is about to become exhausted. Okay, so here's the thing about that, Jim, and I'm not saying that. Halfway successful is failure, by the way, in trading. You got to be 100% successful. You don't have to win every trade, but you gotta you gotta be um, you gotta be more than half successful on most trading systems. But here's the thing about that. If you could quantify the trade as being a good setup because you have all this confluence, why would you want to take a trade setup where you don't have as high a probability of it being a winner? There are times, and remember, a lot of this is relative, right, Jim? A lot of it is relative. So if I had a bunch of this, and then I had, you know, something like this, and then we're going to make that black. That's not going to be terribly attractive to any of us. Because you're a trader, and I've already told you what's the most important thing. Well, maybe I didn't say it was the most important thing, but it is absolutely the most important thing to us in our trading. I'll give you a clue. What is the most important thing to us in qualifying a trade setup? The very first thing I'm looking for to qualify a trade setup. Anybody? Anybody? Bueller? Bueller? Strong momentum. Momentum to anticipate exhaustion. So what can you tell me about this right here? Does this look like a strong momentum? Does this look like I could anticipate exhaustion? I had one bar. No. The Rockstar takes this indicator, the pink outline, and the divergence. It does not take a strong push. The momentum, it does take in the oboes. Okay, so you could do that. The Rockstar will not remove you, the trader, from accountability. Okay, the Rockstar will not make the decision for you. That's still, yeah, and that's, how easy this would be for all of us to make buckets of money if it would do the work for us. You know how many people are in the business of selling auto traders getting rich because people want to remove themselves from the accountability, or they believe that this should be easy. A computer can do it better than they can. Okay. If that were the case, why aren't we all trading auto traders? The difference between the black and the gold star. You're only going to see a gold star after it heck did I just do? After it moves outside of a zone that we call the naked rock star zone, we have an indicator that's over here on the right side of the screen. You may have seen it in one of the screenshots, but it's essentially a zone that if the rock star prints inside that zone, which is generally, on a push like this, it's going to be down here. If it prints inside that zone, it's going to print black, which is saying that it could qualify for a rock star trade, meaning if we had, oh, come on, meaning if we had a line of support or resistance here, that could qualify for a rock star trade. But without it, that would be a naked rock star trade. I will not take a naked rock star trade with a black star, because that's essentially, we're just basically just now getting, that we're still inside this zone, this channel. We have broken outside of this one, but not completely. So that means that the potential for exhaustion isn't nearly as good as the gold ones. Okay, that's why we have them changing colors. Of course, this is all user selectable inside the indicator. You're looking for that auto trader that wants to make everybody rich, and they promise they're going to make everybody rich, and you don't have to work at trading. You just have to give us $20,000 or $10,000 or whatever, and turn it on and go play golf. Yeah, we've all looked for those. Every one of us have looked for those. Every one of us believes that should be possible. But you got to ask yourself, why aren't we all trading those if it's possible? The thing about those auto traders is they work great right until they don't. And it takes a while before you find out that it's not working anymore. That while that it takes, you've usually lost all that you've made and then some. It's personal accountability. It's practice. It's an understanding of what you're doing, the system that you're doing it in, what the indicators are doing, where the weaknesses in the market are, because that's what we're looking for. We're looking for underlying weaknesses in an uptrend or underlying strengths in a downtrend. That's what I'm doing with all of these indicators. Weakness in an uptrend, strength in a downtrend. When all of that starts to set in, we have an edge. Okay? But there are a lot of factors, and here's the thing. Here's the thing that a lot of us don't understand. What makes price move? Tell me what makes price move up and down on a chart, excluding the robots that are doing stupid stuff. What is it that makes price move? Why would people buy or sell a contract? Now, what makes them buy or sell? Why would they do it? Who's making it move? Yeah, Ken's the closest. Ken, you're actually on it. Price moves because of people's thoughts, feelings, and emotions about price at particular levels. If people feel that price is if the thing is undervalued, they're going to buy. If it's overvalued, they're going to sell. So price moves based on people's thoughts, feelings, and emotions. Now, we all think that trading is about money and math, numbers, and all of that. What is it that we're measuring with money and numbers and price? What are we measuring? How are we building a chart? We're building a chart based on emotions and expectations and feelings and thoughts of people. Forever, that's how that's what causes price to move, whether it's in the stock market or whether it's at the supermarket or whether it's at the boat dealership or whether it's, anywhere. Okay? If somebody's willing to pay a price for something, that's what that something becomes worth. Okay? Art is a great thing. Something's worth $10 million because somebody's going to pay $10 million for it. That's what it's worth. Okay? That's what's happening in the markets. Now, when we have millions of people in the markets, or thousands or hundreds of thousands or whatever, how many combinations of thoughts, feelings, and emotions are potentially in the markets at any given time? How many combinations of thoughts, feelings, and emotions? Infinite, billions. How are we going to quantify that in order to make any order out of this so we can trade? How are we going to do that? We're going to apply algorithms. We're going to apply math to it so that we can try to get our brains around it, just like we do with quantum physics and the universe and all of that. We don't know. We can't tell about what's out there, but we can use math and quantum physics and things that we know to formulate what we don't know or to try to understand what we don't know. And that's what we're doing in trading. Price moves because of thoughts, feelings, and emotions. That's what moves the market. So if you think an auto trader is better at understanding thoughts, feelings, and emotions than you are, then I think you need to try trading with an auto trader. Personally, there ain't no auto trader out there that can trade better than me, because I have a realistic understanding of what I'm seeing when I look at trading charts. I understand what's happening when price is being manipulated. I understand who is doing the manipulating. I understand why they're manipulating it. I understand the net result of what they're expecting when they manipulate it. And I know what's likely to happen next, or at least in the short term. That gives me an edge. It's not a huge edge, but you don't need a huge edge in trading. You just need an edge that you have confidence in. No, I don't care about the institutional trader, Jim. I only care about the institutional trader because he's the guy manipulating the emotions of the people that I want to take advantage of. The institutional traders are who I'm watching because of the idiots that are reacting to the institutional trader. When I say idiots, that was me for many, many years. We are like puppets. We are habitual. We do the same things over and over and over again. We operate way too fast for volume profile, in my experience, Jeff. I have looked at it, but the volume profile, we can't make fast enough decisions with volume profile for what we're doing. You could possibly do it on a different time scale, but that's not what I'm doing. I think there's probably a way you could, but I don't see it as viable with what we're doing. So those are essentially the trade setups and an understanding of the trade setups. There's a lot more to learn. We have much more detailed trade setup training, but this certainly helps you to understand what it is that we're doing and why we're doing it. We know what we're doing and why we're doing it every time we place a trade. We know what we're expecting to happen. We know why we're expecting it to happen. So that's a lot of problem that I had in other trading systems. The only thing I knew with the other trading system was, hey, if this is doing this, then do this. Where's that? I didn't really know why I was doing it. I didn't really understand that, I was competing with somebody on the side of my trade who had the exact opposite understanding of what was about to happen than I did. Okay, so everybody knows that trading is zero sum, right? Every time you lose a trade, somebody else won that trade, took your money, right? Everybody knows that. For every winner, there's a loser. That means you're competing with somebody every time you place a trade. You better know more about what's going on than they do. You better know better why you have an edge more than they do. All right. All right. You want to move on? Okay. So, um, uh, well, what I'm saying is I'm following them because they're going to create the condition typically, not always. So I'm following them in that I'm not trying to trade against them or with them. I'm waiting until they do what they do, and then I'll want to take a trade. So of course I want to know what they're doing and when they're doing it, but I'm not following them or trading with them or trading against them. I'm waiting for them to create the conditions that give me an edge to take other people's money. I'm not trying to take their money. So maybe I said that, but you got to make sure we understand the context. Okay. Okay. So, yeah, we have the special. Connor put that in the chat. I already talked about this. We've got a really good deal going. Typically, most of our traders uh, will start out with the Einstein or upgrade to the Einstein if you can. That's really the best way to go. If you can't, we did create other packages to help you scale up to the Einstein over time. It's cheaper to do it all at once, but it ultimately, it's up to you and how you want to do it. Connor tells me this ends tomorrow evening. We have had a special open house through most of January, and that ends tomorrow. So any of you that have been enjoying our open house and hanging out with us, we appreciate having you. We are glad you're. That was too late. We're glad you had an opportunity to come hang out with us. And tomorrow's the last day. And then it's just back to our little family that we trade together every day in the trading room. Okay, so question and answer. We get we sent you an email, Ken. I send a lot of emails. And we sent emails and we sent email reminders. So I bet you it's in your email or spam or something like that. All right, so question and answer. We get questions all the time, okay? And I'm going to just throw out the questions that we get all the time. Some of you may find these questions that you want to ask. These are just to kind of help you with whatever questions you want to ask. We've already been at this an hour and 40 minutes. I'll answer questions as long as you have them. I'm happy to answer questions. These are the most typical questions we get. I don't know if you guys want to ask me the answers to these questions or if you have your own questions. This is just to kind of help, you know, grease the skids for you to to help you start answering, to make you more comfortable if there's something that you need to know about our trading system, our company, our products, our service, our support, um, whatever you need to be comfortable investing in one of our products or services to help you. We also have a whole bunch of references that we're happy to give to email. Um, don't ask them to send their statements. I had somebody do it the other day. They wanted a trading statement. He didn't think, he thought everybody was liars. Just send me your trading statement. That's all I need. So I advise people, do not share personal financial information with total strangers. Um, just tell them about your experiences. So there's a whole bunch of questions. I'd be happy to answer any of them, all of them, none of them, whatever you feel like you need. Jim, I know you've had a lot of questions. This may have confused you more than you were when we started. I had a lot of assumptions and expectations that I realized after 7 years of trading that created a foundation of a trading career built on assumptions and expectations, absolutely no merit. One of those is that trading indicators tell you what to do. I was looking for 7 years for something to tell me what to do the work for me. I thought I was doing the work. I thought I was doing what I was supposed to be doing based on what I was reading on trading forums and watching on YouTube and all this other stuff. As soon as artificial intelligence can read human emotion and behavior as well as I can, sure. But I'm thinking that either my microphone went out a few minutes ago when I was talking about auto trading, or you left the room for a minute. Because computers cannot, will not, and not in our lifetime be able to understand human thoughts, feelings, emotions better than I can as it relates to trading. So all you need to do is understand what's going on when you're watching the charts move. And I've been doing it long, and I can look at charts. I can actually almost see people on the other side of my trade reacting. Okay, well, good. Then you don't need me. And auto traders, like I said, they always do okay until they don't. Right? They will never always be okay. I have never, ever, ever met somebody who has used an auto trader for an extended period of time successfully. I'm not going to say that it hasn't happened. I'm going to say I haven't met anybody that has and that can prove to me that it has. Okay. Of course, I always have people say that, not always. Sometimes people say, oh, yeah, well, I created one and it's awesome. Okay, great. Well, why are you coming to a webinar then? You don't need me. You don't need this trading system. You don't need anything else. You're doing fine. Your auto trader is exactly what you wanted it to be. But my experience, is that you cannot remove the human factor of trading. You cannot remove the accountability. There are too many subtleties and nuances that, based on experience and quick decision making, that computers can't do. Yeah, that's a good point, Dale. So we've had computers around for a long time, right? Of some sort. And we've had the PCs and all these things for a long time. Why is it so hard to create a self-driving car that people will just jump into, or and without worrying about it? Why is it? What is it about self-driving cars or flying cars that's taking so dang long? What's the deal with flying cars? Why don't we have flying cars? That seems pretty dang easy, right? It's just computers. Why can't I have a computer fly my car for me? Please tell me that. Yeah, the whole different thing, Jim. Can your auto trader actually move the market? Well, there you go. Any other questions? You like it, Jerry? Um, I've been at this for a long time now, and I have a realistic understanding of what a lot of people struggle with because I struggled. I took those bullets. All right, no more questions? Well, don't forget, we've got just a bunch of references. If you guys are, when you want to email some of our other traders, find out what they think. We've got a very, very happy group of traders. We gather every day in our trade room. We've been doing this going on 10 years now. We've won awards. We've got all kinds of things going for us that a lot of people don't. A lot of trading systems don't. A lot of indicators don't. Um, we've got some great packages to offer you, and I'd be very happy to talk to you if you feel that you need a conversation to clarify anything that maybe I didn't discuss, or maybe questions that you have come up later. Feel free to send us questions to our support desk, and if you need a phone call, just put that in email to us, support at theintentionaltrader.com. Well, thank you, Jim. I hope I didn't come down on you too much. I have some. I really do want to help people a lot, and I know a lot more of the pitfalls than a lot of people do because I've done it. I've had the struggle, and I managed to make it out the other side, and not a lot of people have. So I do have some insight, and I'm happy to share it whenever I can. Good. All right. Cool. All right. Well, thank you, everybody. Thanks for coming, and we hope to see you all again really soon.